Splendid evening it is to you viewers. Welcome to Equity News on EquityAxis, your cross-section of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from Hampton Studios. I'm Ibn Mabunda. Let's get to business. The Minister of Mines and Mining Development, Honorable Winston Chitando, says a joint venture agreement is set to be signed between Vast Resources, the Zimbabwe Consolidated Diamond Company, the Zcdc, and Katanga. Katanga is a new entrant onto that market, being a community project for the people in Marange area. The minister said that this project could produce positive results for the Zimbabwean diamond mining sector. Meanwhile, President Edi Mnangagwa is expected to launch a mining strategic roadmap on Monday morning, which is an initiative to take Zimbabwe toward producing a 12 billion mining industry in Zimbabwe by the year 2030. Toronto-listed Caledonia Mining, with mining interests in Zimbabwe through Blanket Mining in Bulawayo, yesterday opened an oxygen plant in Bulawayo. The plant is said to improve the firm's efficiencies in the mining sector. Currently, the firm is producing between 53,000 and 56,000 ounces of gold annually and is targeting to produce 80,000 by the year 2022. And with this plant on board, it is expecting to ramp up its operations by end of the year. Meanwhile, PPC Chief Financial Officer Ms. Trifosa Romano steps down to pursue personal interests. She had been with the entity for a good 8 years. In MASVINGO, a statement has been issued by the acting town clerk to the effect that the municipality will not be able to meet all the water demands of the city over the next few weeks. And of course, the city council has resorted to the issuance of bowsers in a bid to meet the water requirements of the city. The city requires 60 megaliters of water. At the moment, can only provide just 20 megaliters of water. Meanwhile, it is also apparent that Delta parent AB InBev has announced the redemption of $725 million worth of its shares. Now, beyond our borders, Ethiopian Prime Minister Abiy Ahmed has won the 2019 Nobel Prize in appreciation of his efforts toward peace and international cooperation. Now, this concludes our evening news bulletin. Up next is a look at the news in News Review. Don't go anywhere.
climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Welcome back, viewers. It's now time for news review, and joining me now for an interesting conversation is Chief Analyst Respect Quincy. Respect, good evening and welcome to the show.
It's always my pleasure, Ethan. Thank you.
Beautiful. It's been pretty much an eventful week,
Yes.
so we just want to crunch some of the matters that did take place during the course of the week. Yesterday we saw Wange Colliery issuing its half-year results for the year ended 30 June 2019, and the particular increase is the fact that they posted a profit of $3.5 million against the background of a series of losses, particularly $23 million in the same comparative period in 2018. What is your comment where that particular position is concerned, given the fact that there was a 52% decline with regards to their production output?
Yeah, I think Wange has basically been a problem child. If you've been following the markets over the past few years, you realize that they haven't been able to produce enough in terms of volumes that could cover their basic costs. So you need to produce at a certain level where you are able to cover much of your operating expenses, but they haven't been able to do so over the past years. And another problem with Wange was also the issue to do with pricing. They haven't been able to correctly price their produce in a way that your basic income would be above your basic costs as well. So this has been some of the challenges that Wange has been facing, and also I think generally their production levels have been suboptimal to the effect that they couldn't produce enough to report a profit position. But I think it's also important to get to the background of what's the dynamics around Wange. So Wange is a majority owned by the government of Zimbabwe, and it is that's the government of Zimbabwe is the majority shareholder in that company. Of course, there's some other investors in it, Nick Van Hook Stratton, among others, and it was placed under reconstruction a few months back. And obviously it means it's currently under judicial management of sort. So I think some of these dynamics might be beginning to shape up. It might be reconstructed in a manner that's actually progressive in solving some of these challenges. Employees have been fighting with the organization for quite some years, and contracted the guys that they contracted to also do part of the production, or called Motor NGO, have also been increasing their own volumes as well. So they've separated in terms of how coal is produced. So you have on the one side Motor NGO producing coal on behalf of Hwange, and also Hwange themselves producing some other part of the coal. So obviously this has helped boost their volumes over the past few months. But also I think the issue to do with contractors, if you find that in these organizations where government has much influence, ministers and so forth have tried to get some of the larger contracts or give their own cronies some contracts to do with supply of certain or deliveries of coal, and obviously this means overinflating costs and so forth. So naturally that would cause costs to swell beyond your normal revenue levels. So I think some of these are beginning to be addressed as we go. But there's another dynamic around the power crisis in Zim. Obviously, in the face of low production of hydropower, I think thermal power has received so much attention. I'm sure you have heard that the Hwange Thermal 7 and 8 are basically under construction right now, and 1 to 6 have been receiving attention in terms of propping up the plants and so forth. These are old plants, but naturally for those thermal power stations to be producing, it means they have to feed in coal. And where does that coal come from? It comes from Hwange Colliery. So I think this has been one important demand source for Hwange, and obviously they have had the chance to bargain with government in terms of the price over which the price of coal that they're supplying to government. And I'm pretty much sure this has helped spruce up demand. If you look at the hydropower, it's supposed to generate about over 1.2 thousand megawatt, but presently we are doing just basically less than 200. That is from hydro, and much of it is being substituted by Hwange, which has now gone above 500 megawatts. I'm sure the minister gave an update recently. 1, 6 and 7 are up, 1, 7 and 8 are up. Then the production volume from the thermal would actually go up. So I think this has been a good substitute for water-produced electricity in the face of Kariba's low dam levels. So I think all these factors have helped shape Hwange's performance in the first half of 2019.
Fair enough. Now let's talk about Fitch rating statement that they've raised a red flag where the prices of tobacco are concerned due to stringent regulations that are being passed at an international level. Bearing in mind that tobacco is one of our largest forex earners. Remember last year, tobacco raked in about $1 billion in forex receipts. What is your perspective of this particular development?
Yeah, this is actually a big deal. If you look at tobacco, in terms of what we generate annually at about $1 billion, I think that's a very key statistic. Of course, this year that value might actually go down significantly because prices were actually low and international demand is actually low. So it might be going in at an average of about 600 million thereabout. Now, if you are to look at the implication in terms of ZIM, when you look at this gold's contribution, suppose we hold it at about 1 billion against net foreign receipts per annum from exports of about 3.5 to 4 billion, that's about a quarter. So you have a quarter of your exports to the international world currently under risk, and that risk is that we might face a very sharp decline in terms of prices because there's been lobbying around the usage of tobacco and the consumption of tobacco and so forth. So I think that's quite a big deal. In terms of the net implication, I'm sure if anything we are looking at a value loss of at least 25%. So that's got to be a very big deal in terms of the dynamics around the economy. We have gold, which has been performing well, but I think gold is a risk-averse asset. Obviously, when the economics of the global economics is not shaping out well, if there is a significant risk on the outlook, people tend to get into these safe haven assets, and that's why we've presently been seeing gold taking a very sharp growth stance. But I think as Zimbabwe failed to capitalize on this momentum because of our own macro challenges, our failure to look at issues to do with how to remunerate the producers of gold. We're down about 25% as at half year in terms of production, and that doesn't augur well when prices are actually going up. I think when international prices are going up, we should actually see production also catching up and even growing at a much faster pace. But this has not been the case. So for tobacco, this is going to be a huge blow. I think when you put it together with some of the, I don't know when the impact is going to fill in. It might take at least 2 years or maybe even 5 years to get to a point where its consumption is reduced significantly, and also regulation being increased to more stringent levels. It might take a number of years, but I think when it finally comes, it's going to compound our current challenges. You know how farmers battled to really have some good prices over the past selling season, and the detrimental effect it has going forward in terms of their willingness to keep on producing that similar crop. So I think we are not looking at a very good outlook as a country in terms of our tobacco production. We're one of the world's biggest producers.
Speaking about commodities that we produce here, the Minister of Mines says vast resources alongside Zcdc, the Zimbabwe Consolidated Diamond Company, alongside Katanga, which is a mining project, an initiative of the people in the Marange area. They're set to get into a joint venture agreement. How strategic would be such kind of an agreement or a venture in propelling the diamond mining sector forward?
Yeah, so I think vast. That's one of the biggest players coming in there. You've got Zcdc coming in to represent government's interests. They basically bring in the land. That's much of their value. Then you've got Vast, who brings in the capital and of course, the expertise as well in terms of mining. But Vast is divested from other mining ventures in Zim. I'm sure you would be aware that they were part owners of Dalaglio,
yes,
which they sold a few months back to one of Zimbabwe's listed companies, which is Padina. So they've now focused their attention on diamond mining in Zimbabwe, and this is their entry point. So I think this is a compromise between government, who is the regulator, and also partly the owner of the land, and Vast, who are the providers of capital, and that other third vehicle is mainly made up of locals. This is obviously trying to correct the challenges of yesteryear, where you find your empowerment funds that were created in Marange failing to tick off because government did not honor its obligation, and also the players which were there were quite dubious as well. I think these are the kind of structures that you will need to find as we go forward. But they have to be commensurate, they have to be considerate in terms of the providers of capital, whether they're getting a fair value out of their money. I think that's what's important going forward. We need to create a model which outsiders can look at and believe, such that when they also consider investing in Zim, they will find the model to be working. So it doesn't have to be on paper, it has to also be on principle, so that in practice as well, people can know that you can actually enter into such kind of partnerships and yield positive results and actually sustainably invest in a certain venture.
I realize. Well, this concludes our evening news bulletin. Thank you for watching. We're just going to, of course, just take a quick one, and when we come back, we'll just round it up. Don't go anywhere.